Do you think there is any merit from what Ethereum is doing?
Yeah, so let's go to that. So how do I analyze that entire part of the ecosystem? Once you've gone beyond digital property and digital currency, you've got digital platforms and digital applications. Okay, the idea of a digital platform is you want to dematerialize, I guess you're dematerializing AWS or some other operating system. You're dematerializing a little bit of what are the platforms people use today. They use AWS, they use Azure, they use iOS, they use Android, they use Windows. Right? They use those platforms to build applications, and Ethereum is decentralized platform to build applications.
Massively, Bitcoin and Ethereum are the two most massively decentralized protocols. Like, I don't think anything else comes close to that.
I get it. So Bitcoin wants to dematerialize or demonetize property. Ethereum would like to dematerialize insurance companies and banks, and it's a real question. Are they dematerializing the operating systems and they're competing with AWS and Google and Microsoft and Apple? Or are they competing with Fidelity and JP Morgan and insurance companies and NASDAQ and New York Stock Exchange? You could say the platform is competing with raw technology and the big tech companies. And the applications that run on the platform are competing with finance companies and other types of banks. So what do I think about that? Well, I think it's complex and competitive, and it lacks regulatory clarity. I mean, the three big risk factors. The risk factors are clarity, competition, and complexity. It's a lot more complex to create a decentralized exchange, right? Look, DeFi, a decentralized exchange is competing with Binance and Coinbase, in addition to competing with NASDAQ and New York Stock Exchange and the like. So obviously, you have to build more functionality. Applications need to be optimized for functionality and performance. Bitcoin doesn't need. Property needs to be optimized for integrity and durability. So if you're going to add functionality and performance, that creates an additional risk factor. You got a lot more competitors, right? So is Ethereum competing with big tech, or is it competing with Binance and Coinbase, or is it competing with Solana and Binance Smart Chain? I mean, or is it competing with Cardano?
I mean,
right?
Yeah, but Binance Smart Chain and Solana, they're very different. Binance Smart Chain is to some degree is very centralized compared to Ethereum.
I get it. I get it.
So I guess my question...
The risk factors, by the way, the fundamental risk factor is if these things become viewed as centralized, then you've got a regulatory risk that the regulators will call your token a security and shut it down.
Right, yeah. And I'm not saying that, that some, you could argue, there's always the argument about decentralization versus centralization, and there's just sort of, there's trade-offs between the two. Of course, there's trade-offs between the two. But with Ethereum, it's regularly settling like 2 to 3 times the value that Bitcoin is, and that doesn't even include decentralized finance. So my question is to you, like, is it interesting enough for you to ever invest any of your own dollars into Ethereum? And if, what would have to happen?
It's venture, Ben, it's venture capital, right? This is you're speculating that you're going to replace centralized exchanges, and you're speculating that you're going to replace other businesses that do this, and you're speculating that you're going to compete favorably against big tech, right? And you're speculating that you won't get beaten by another competitor, and you're speculating that the regulators won't regulate it. But look, the regulatory risk of using crypto as a currency is much higher than using crypto as property, right? So if I have $1 billion and I store it in a regulated exchange forever and I don't move it, that's least risk. If I try to move $1 billion around as a stable coin every minute of the day, that looks like it's violating money transfer laws. And so the regulatory risk of using stuff high speed goes up. The regulatory risk of trying to replace a stock exchange or a trading exchange or a commodities exchange with a decentralized exchange. DeFi is non-KYC, so is it the obvious issue that if you're trying to dematerialize or replace an exchange, you're inviting the regulators of the exchange to regulate you? So the CFTC will have an interest if you're actually trading commodities. If all of these things are deemed as, have you noticed what's going on right now? If what they'll say is, we're not regulating spot market ETH and spot market Bitcoin because there's a general consensus that ETH 1.0 and Bitcoin are property, and it has not been overturned. Okay,
right.
That's about the only regulatory consensus in the world. There isn't consensus about the definition of a security token versus a commodity token, and certainly there's a lot of resistance to trading in futures and derivatives of these underlying commodities. So if you're actually creating something, we have centralized exchanges right now, centralized exchanges that are trading derivatives of commodities, and they're getting regulatory heat, right? We don't have to talk about it, but you can see it. Now, if you have a decentralized exchange that also trades, potentially trades commodities without KYC AML, which is the whole point of these things, then they're also going to get heat. So here's the way I would break it down. I would say if you have a bucket of capital that you want to invest conservatively for a decade or longer, you would buy digital property. If you have a bucket of capital that you would invest in companies, right? Then like a Apple or Google or that, then maybe you think about the dominant crypto. But I would say, if I had to boil it down, I would say you've got Bitcoin as a risk-off asset. Ethereum is like a unicorn. It's like an Airbnb or an Uber, and you may get extreme amounts of money. But it also could be WeWork. And you have to think that through. And then you've got all the other cryptos which look like ventures. And if you have a venture capital fund and you're looking for a 100x return on your money, but you're ready for 95% or 99% of your ventures to go to zero, then I think you could play in that. There's a 99% failure rate with mobile apps. There's a 99% failure rate with most ventures. And so I think most of the cryptos, you're speculating, it's either a gamble or it's a venture. I think that Ethereum has been the most successful because it was the most decentralized of the smart contract platforms, and that's an advantage for it. But there's just a lot of complexity, a lot of uncertainty. Like, what happens between ETH 1.0 and 2.0? When will that happen?
Right. That's a big thing. Yeah, that's a big thing that carries some uncertainty.
And it's ambitious. And the problem with the ambition is you're inviting insurance regulators, commodity regulators, securities regulators, intellectual property regulators, and money transfer and banking regulators all into your world as you pursue ambitions. And the less ambitious you are, the least ambitious you are, the less you invite that scrutiny. So if your use case is, I'm just going to buy $1 billion worth of something and put it in a regulated custodian and not touch it for 100 years, you can probably jump through the KYC AML hoops, and you don't actually touch on the issue of futures trading and regulatory arbitrage. And of course, the likelihood that you're going to do a flash loan trade and lose your money goes way down if you're sitting in cold storage. So I think that the right answer to this is you got to figure out what your risk profile is. If you say, if you define the world as the only thing I'll ever invest in is crypto and I need to be diversified, I think you might be taking too much risk in some of the cryptos. That's the same as defining the world as the only thing I invest in is stocks in Venezuela, but I must be diversified.
Yeah, I think 100% crypto portfolio is not a good portfolio by any stretch of the imagination.
You have the big uncertainty is regulatory behavior because we don't have clarity right now.
I agree.
And the world it'll be 3 to 4 years before you have clarity. if someone were saying to me, what should you think? I would say, go on YouTube and watch 25 hours of Gary Gensler's lectures on blockchain and money that he did at MIT in late 2018, and listen to him. And I think that he takes the position that he says, I'm not a maximalist or a minimalist. I think it's possible to have permissioned blockchains, but there's this question of what are you trying to do, and you're going to have to come into a regulatory compliant environment for that. So I think you got to consider that thing very carefully. And then as an investor, I think the message of investing is that 99% of the ventures fail, and 95% of the big companies don't perform. 90 to 95% of the S&P 500 is a loser in the last 10 years. The winners are Microsoft, Apple, Amazon, Google, Facebook. I mean, the winners are outstripping the losers. It's a winner take all. So you have to really find the winner. And if you're actually selling the winner to buy the losers, then you're in trouble.